Demand and prices are heating up. These travel stocks to buy could be your ticket to profits this summer. Airbnb. It's listening to users and implementing changes to stay ahead of the competition. Booking Holdings. It's almost never been cheaper to buy. Marriott International. Its service sets it apart. Let's dive in. Here are the 3 travel stocks set to profit this summer. Welcome to Timely Investment Research. If you've tried to book a flight or lodging recently, you've probably noticed that prices are significantly higher than they were a few years or even a few months ago. That's because prices are rising along with surging travel demand, both due to pent-up demand following the pandemic and seasonal trends as we head into the prime summer travel season. This makes now an interesting time to consider the best travel stocks to buy. With demand showing no signs of cooling off and travelers seemingly willing to pay increasingly higher prices, travel companies stand to reap the benefits following the tough couple of years. Indeed, many travel stocks are rebounding along with key industry metrics such as bookings and occupancy rates. For investors looking for the best travel stocks to buy in 2023, check out the 3 names here. Number 1. Airbnb. I understand there are a number of objections to short-term rental properties, everything from party houses in generally quiet neighborhoods to reducing the availability of long-term housing. But the reality is that people have to stay somewhere when they travel. So, why not in a place that's home-like, comfortable, and often cheaper than a local hotel or motel? The fact is Airbnb provides a service. Most of the time, that service goes off without a hitch. In October, Center for Housing Economics Director Roger Valdez wrote in Forbes that short-term rentals aren't the problem with expensive housing, the lack of supply is. He uses Steamboat Springs, Colorado, as his example. It's a recommended read. The one thing I found about Airbnb Chief Executive Officer Brian Chesky is that he's not afraid to listen to his guests and hosts. So it's not surprising that the company did a deep dive into complaints from its guests and came up with 50 improvements to the Airbnb platform. Airbnb is very profitable. Now it intends to be the best-liked short-term rental platform anywhere. That's money in the bank. Number 2. Booking Holdings. I recently recommended Booking Holdings as one of the 3 most innovative companies disrupting their industries. In the online travel world, Booking has used artificial intelligence for more than a decade to improve the customer experience, according to CEO Glenn Fogel. Booking Holdings' business, which includes popular sites like Booking.com, Kayak, and OpenTable, is booming. In 2022, revenue jumped 56% to $17.1 billion, while operating income surged 165% to $3.1 billion. Even more impressive was that its free cash flow margin was 36.2%, 13.2 percentage points higher than a year earlier. This week, the company reported better-than-expected first-quarter results. Revenue increased 40% year-over-year to $3.78 billion, coming in slightly ahead of estimates, while adjusted earnings of $11.60 per share easily beat the $10.61 per share analysts were expecting. Shares are up 29% year-to-date and more than 60% from their 52-week low, yet from a valuation perspective, they've rarely been cheaper. Booking Holdings is trading at 6.1 times sales and 15.9 times cash flow. Of the 31 analysts that cover its stock, 17 rate it overweight, or a buy, with a median target price of $2,850, which is 9.5% higher than where it's currently trading. I think Booking Holdings has a little more left in the tank for the second half of 2023. Number 3. Marriott International. Marriott International stock is up more than 20% over the past 2 years compared to a less than 4% gain for the S&P 500. In fact, shares hit a new all-time high this week after the company reported better-than-expected first-quarter earnings and delivered an upbeat forecast. Yet, even though shares are within spitting distance of their record high, they are trading for just 2.6 times sales, which is roughly half what they were at in 2021. Marriott is an excellent travel stock to buy for the long haul. If it could survive the pandemic, it can survive anything. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, please give us a like, hit that bell icon to never miss an upload, and hey, don't forget to subscribe.